If you have hair and run a business, then this video is for you because you've probably seen influencers on social media saying that you can deduct your haircuts. They say that a haircut is an ordinary necessary business expense in the pursuit of income under IRC 162A, since it is reasonable to say that you actually do better in business by not looking like an unkept zoo animal. But these influencers are using their brain, which is dangerous, and they are completely butchering the interpretation of what is otherwise actual tax law and statute. So in this video, we're going to go through case law to completely destroy these social media influencers. And if you don't know me, I'm Jasmine DiLucci. I'm a tax attorney, CPA, and an enrolled agent. My day-to-day is actually running my CPA firm and my tax law firm, but I started posting on social media after a decade of practicing tax to show you actual tax law. All right, haircuts. We all get them. Well, almost everyone, even me. Here's a video I had before a haircut, and here's one I had next week after a haircut. My hair comes with me to every business phone call, every client meeting, and every YouTube video. So obviously my haircuts are deductible, since who wants to see a hairy tax attorney? Well, tax court doesn't see it that way, and they would be fine with me being a hairy tax attorney. And of course, tax court's interpretation of tax law actually matters, and your friendly social media influencers' made-up interpretation does not. So as always, let's very briefly start with the foundation of how tax law works, so you can clearly see why so many people get this area so very wrong. Tax law has hierarchy. At the top, we have statute. That's the Internal Revenue Code, like IRC 162A, that tells us we can deduct ordinary and necessary business expenses. And while statute is at the top, it usually contains a very small percentage of the details. And that's why someone who has never researched tax law in their freaking life can come in and obliterate the meaning of the actual tax law because they haven't actually looked at most of the tax law. That would be like me showing up at a party, standing outside, being like, no one's at this party, when really I just had to walk inside to see that there are hundreds of people at the damn party. And in that situation, I would just be dead wrong. And me taking pictures of the outside of the building to show proof that I have some proprietary knowledge that no one's at the party would be really stupid. So in this video, we're just going to actually walk inside, walk through the doors that are wide open to see the very clear and obvious tax law on haircuts. So for haircuts, we've already covered one of the relevant statutes, which is IRC 162A, ordinary necessary business expenses. But we also have a competing statute, which is IRC 262A, which tells us personal expenses are not deductible. So we just need to walk up the stairs, through the front doors, so we can run into decades of court cases to find our answer, because haircuts are not a new thing. We'll start with a deep dive into our first and most important court case that almost every other court case cites back to, Drake v. Commissioner, a 1969 regular tax court case, because yes, people also cut their hair back in 1969. In this case, the taxpayer was required by the Army to have his hair cut at least every 2 weeks, but since his discharge from the Army, he has had his hair cut only once a month. And the taxpayer argued that the expenses were not personal because the Army required him to have his hair cut more often than his personal desires dictated, and because, but for his employment, he would not have had his hair cut so often. So let's read the court's opinion, which is also quoted by many future court cases. They say expenses for personal grooming are inherently personal in nature. The fact that the Army may have required such grooming does not make the expenses, therefore, any less personal. The evidence showed that the Army's requirement was directed towards the maintenance by the petitioner of a high standard of personal appearance and not toward the accomplishment of the duties of his employment. In setting standards for personal grooming, the Army is not unique, okay? Many employers, expressly or otherwise, establish standards to which their employees are expected to conform. Men are expected to be clean-shaven and are often required to wear suits, ties, and clean shirts, and women are expected to dress attractively. To conform to these requirements, employees must make expenditures which would not be required if they were at home or not on the job. Nevertheless, such expenditures for general personal grooming are inherently personal in nature and cannot be considered as business expenses. Whew, okay, this case literally hits the nail on the head. They could not have been more clear. They're telling us that even if your employer will literally fire you and throw you out of your job if you don't cut your hair, it is inherently personal and non-deductible under IRC 262A. But it's too early to throw in the towel. It's just one case, right? How many more could there really be? Well, a few years later, we have two more cases that cite right back to Drake. We have Fryer v. Commissioner, a 1974 case, which says the issue presented here with respect to the $100.38, which Robert expended for haircuts in 1967, is similar to the issue in Richard Walter Drake. And then they say, in our view, the expenditures by Robert for haircuts were likewise personal expenses, even though he was required by American Airlines to maintain a well-groomed appearance and to keep his hair properly cut. Okay, next case, different year, same haircut, Hynes v. Commissioner, a 1980 regular tax court case. They said, we next consider the petitioner's deductions for the cost of his haircuts. They recap the holding of Drake and also quote back to the paragraph we read earlier from the case. Then they state, we can perceive no distinction between the situation in Drake and the situation in the present case. The fact that the petitioner's employment with the station required him to maintain a neat appearance does not put him beyond our rationale and holding in such case, nor does it elevate his expenses for personal grooming to a business expense. So maybe you're like Jasmine. I get it, but those are old cases, and maybe there are more recent haircut cases, since maybe you think haircuts have changed over the years. And if so, you would be right that there are many more cases, and we are going to fly through them because their message is not complex. Tilman v. Commissioner in 1984, they say even if substantiated, the cost of haircuts and razor blades is not deductible. White v. Commissioner 2007, they say grooming remains an inherently personal expense and is not deductible, regardless of whether an employer requires a particularly neat appearance. Williams v. Commissioner 2007, they say we have repeatedly held that such costs are non-deductible personal expenses. Petitioners, therefore, are not entitled to deduct the cost of clothing, shoes, and haircuts as business expenses. We have Boltinghouse v. Commissioner 2007, where they say haircuts are non-deductible personal expenses even when required as a condition of employment. Cottrell v. Commissioner 2008, grooming remains an inherently personal expense and is not deductible, regardless of whether an employer requires a particularly neat appearance. Petitioners may not deduct the cost of his haircuts. And finally, Tilman v. Commissioner 2009, they say haircuts are non-deductible personal expenses even when they're required as a condition of employment. So many cases, and no, I couldn't find any that allowed a haircut deduction. So there you have it, the actual tax law. Haircuts are almost never deductible. In a tale as old as time, you are not the first person to need to cut your hair to go to work, and you won't be the last. Now, could you ever deduct your haircut? I say yes, because what we know about overcoming inherently personal expenses by tax court in other areas, like clothing or boob jobs, is that when you do something that is actually detrimental for personal purposes or not able to be used personally, then you typically can deduct it. So for example, if you cut and dye your hair spiky pink for a clown show because you are in the business of being a clown, you almost certainly would be able to deduct it. But you needing to look fresh and clean cut for rich clients, even if absolutely necessary for your business, does not work, and court cases tell us a flat no. So maybe this answer is still surprising to you, and you think, wow, I would never have guessed this answer, and I don't know how to look up tax law. How on earth do I learn more tax law without paying an arm and a leg to a tax attorney? Or maybe you already paid an arm and a leg to your accountant, and you got the wrong answer in return for your money. Either way, you should sign up for my free tax workshops, okay? They are actual tax trainings because actual tax law should be understandable and accessible to everyone. So you can click the link below to sign up for us to send you the topics and the Zoom links as the workshops are announced so that you can attend the ones that will be most helpful to you and your business. And if you like this video and you have as much fun as I do going through court cases and you want to see more detailed tax law, then comment below and let me know. That is actually how I know what type of content you want me to make. And as always, for more actual tax law from a tax attorney, CPA, and enrolled agent, subscribe.